Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, February 15th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. You'll notice in the previous session here, we had a double-ended day here, strong top, strong bottom, closed near the midpoint of the day, nearly a perfect doji day, and for the most part put very strong pivots from an intraday perspective there, and those are the ones to watch today. We continue to see an overall uptrending market here. From a near-term perspective, we continue to see the bullish Pima trigger zone remain bid, but at the same time we're still inside of a range, and this market can't get out of this near-term range here. Still developing that range, still has an upward bias, but we are approaching, we're currently at significant resistance here by way of the 4200 level. 4186.5 is the FOMC key level from last May, and that was yesterday's high. So I mean, that zone right there has been significant. Can price push through and open up the 43s up ahead, or do we start to see some other counter rotation here back through 4060? So again, inside the range right now, still inside day. 36% of ADR as we head into the RTH Open. Fading the edges of yesterday's range seem appropriate until proven otherwise. If we take a look here at the NQ, right now this one's down about 0.4%. 28% of ADR range right now heading into the RTH Open. 28.7%. That is super narrow. Again, yesterday's ranges very strong at both ends of the day's range. Very strong pivots there. We could be looking at fading of those edges here again today. Still an uptrending market. You continue to see the bullish Pima trigger zone remain responsive here with bullish rotations back up within the primary trend here. So that could continue to lead to more strength up ahead until proven otherwise. Again, a failure back through 12.2 opens up what could be a rotation back toward the previous year's close price. So whenever this up move is done, we could be looking at a turnaround that takes us right back to where we begun the year in the weeks ahead. So again, still uptrending for now, watching for signs of some sort of failure here up ahead. If we take a look at crude oil, right now down about 1% here, has been inside the range overall. Again, the 72 bounce led us right back up toward the center of the range between 78 and 80. We mentioned once we got to that zone, we could go sideways a bit before we try for the 82 to 83 edge. That edge is going to be very important. Can price transition above that edge and get us to 93? Or do we see another rotation that brings us back down within the range back towards 73? So right now, still modestly trending up here, sideways at the moment. As long as it holds above 78, 78.5, we have a shot to continue higher toward that 82 edge. All right, let's take a look now at gold futures. Gold down about 1% here, still trying to find a strong low. This one has not found a strong low. We had that sharp 2-day pullback, and then since then it was kind of meandering here, a little bit of an outside day down, and still hasn't found a strong low yet. We are now returning back toward the starting point for the year, 1830. That's been the starting point for the last 2 years. It was the previous year's close, and it was the previous year's close as well. So a big time level, 1830. Price took it bid here. Strong rejection at the 1960 key level edge, and now coming back to 1830. So watching this zone here, we may see a strong low develop here over the next couple of days as we hit that 1830, and that could lead us, at least in the short term, back up within the range toward 1900 or thereabouts. So again, do we get a bounce here off the 1830s up ahead? Still trending down until proven otherwise. Lastly, looking at the Dow, the YM here still remains within a significant compression here. You can see right there that compression has been tremendous. To begin the month, we've been pretty much stuck almost in the first trading range day of the month here. That strong high, strong low has basically kept prices in check the rest of the month. So that initial impulse move that we saw to begin February here has contained prices. We've had one test at the edge here, one test at the edge there. Otherwise, we've been flatlining. Additionally, this is within a multi-month compression. You got 1, 2, 3, 3.5 months here of sideways price action, 13 weeks of compression. At some point, this compression will unravel. Which way will it go? Based off of the overriding weakness, the idea is we may eventually see this thing break right back down for another leg to the downside. Until then, we could continue to see compression as this thing develops for that big move. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.